Hello, traders. First up, let's talk about the dollar index. The dollar index ultimately shows how strong the US dollar is compared to the other currencies. Last week, the index pulled back a bit to around 106 after briefly dipping to a 1 month low of 105.41. This happened right after some solid non farm payroll data, which gave the dollar a bit of a bounce. Now, the market's still betting on a December rate cut from the Fed, with about a 70% chance priced in. But at the same time, the US economy is showing resilience, with the Atlanta Fed upping its GDP growth forecast to 3.3%, which is supporting the dollar. Looking ahead, we might see some seasonal weakness in the dollar as we head into December, which could keep the dollar index moving within a narrow range for now. Some key technical levels to be aware of. The index needs to break above 106.2, which is the 23.6% Fibonacci level, in order to test 106.38 and maybe even 107. On the downside, the key level to watch is 105.21, which is the 40-day moving average. Next up, the dollar yen. This pair's been under some pressure lately due to the big contrast in US and Japanese monetary policies. While the US added more jobs than expected in November, rising unemployment and the Fed's dovish outlook have kept the dollar on the defensive. On the other side, the Bank of Japan is still holding a hawkish stance, and expectations for more rate hikes are supporting the yen. We're also seeing falling US Treasury yields and a general risk off sentiment, which is giving the yen some extra strength, keeping dollar yen hovering near the key 150 level. Technical levels to look out for. Immediate downside at 148.65 could open the door to 148 and possibly all the way down to 146. If we see a bounce, resistance is sitting at 151.23 and 151.98. The 14-day RSI is sitting at 41.2, so there's definitely a bearish bias here, and it looks like there's room for more downside. Lastly, let's check in on spot gold. Gold's been stuck in a bit of a range recently, with mixed signals from the economy. Gold prices dropped last week, falling 0.87% to a 2 week low of 2613.5. But then, bargain hunters stepped in and pushed the prices back up to 2640. The Fed's dovish stance and expectations for rate cuts are still supporting gold's appeal, especially since it's a non yielding asset. However, keep an eye on upcoming US inflation data and China's trade figures. Those could stir up some volatility in the gold market. A higher than expected core CPI on December 11 could push Treasury yields up and weigh on gold. But if inflation comes in weaker than expected, that could boost gold prices. Some technical levels to be aware of. A move above 2666 could target 2672.5 and 2700. On the downside, keep an eye on 2605 and 2536.8. The RSI is neutral right now, which suggests we might not see a clear direction in the short term. And that wraps up today's analysis on the US dollar index, USD JPY, and spot gold. Be sure to watch those key levels and keep an eye on the upcoming economic data. It could make all the difference for your trades. Thanks for tuning in, and as always, trade smart and stay informed.